And I think where this all comes together is leveling the playing field on financial literacy. Regardless of where you come from, what your socioeconomic background is, the features should be easy to consume. So it's all about empowerment of the consumer, giving them the opportunity to take control of their finances. And the way to do that is by providing them a simple, secure, and a fully integrated system. So think of our platform like a high-end retail experience for the renter. They walk in, and all the products that would normally require research and effort are now on the shelves. And they have a shopping cart, and they can pull things in. And now, can we uh, level the playing field and have everybody consume it? I believe so. And I think the answer is intuitive user experience. And if we can create that, we can really create a lot of value.
What is up, YouTube? Matt McKeever here, and in today's video, we catch up with Karthik from RentMoola and discuss what he's seeing as far as the struggles that landlords are having. If you're unfamiliar with RentMoola, we're going to cover it in today's video. We'll throw a link in video description down below so you can check them out as well. But essentially, this is not a sponsored ad or anything like this. This was just me really trying to make friends in the fintech and prop tech space. So just a little aside here, guys. If you currently know anyone connected in the fintech or prop tech space, I would love to make more connections. Let's get connected in the comment section down below or DM me on Instagram. But again, just reach out to Karthik, want to hear his perspective and what he's been seeing in regards to his customers. That's us landlords in regards to 2020 rent collections and some of the struggles that COVID-19, quarantine, and all that stuff brought to us. So let's jump into today's video and catch up with Karthik. All right, so I'm really excited for this next segment, guys. We're going to be talking to Karthik. Hey, Karthik, how's it going?
Hi, Matt.
And so Karthik's coming to us from RentMoola. So I'm really excited. I want to start bringing more, technology-oriented solutions to my YouTube audience, to real estate investors, to property managers. So really excited that you were able to make some time and just kind of chat to us about, RentMoola, kind of how it's providing a solution to landlords and property managers, and even just hear a little bit more about your background with RentMoola.
Good morning, Matt, and good morning to all your wonderful audience. So I'm Karthik Manimosi, CEO of RentMoola. So prior to joining RentMoola, I have 2 decades of experience in enterprise software. I work for such brands as SAP, Dell EMC. Also work for startups of different sizes and shapes. I actually took charge of RentMoola as their CEO last November. And one of the things that really struck me about this market is that it really impacts a huge population here in North America. There are around 50 million renters in US and Canada. That's 1 in 3 households. And just last year, we had 550 billion in collected rent and utilities just in North America alone. So very excited by being able to work with such a broad customer base, obviously consumer base, if you like. So when I came on board, RentMoola has already been around since 2013. The phase 1 of RentMoola is more around automated rent and utilities collection. So when I came on board, the part I was very intrigued and interested in is, how do you create innovation in this industry, right? You look at this market, it is as recession resistant as any market can be, unlike retail. It's non-cyclical. Things happen through the year, which is very different also again from retail. However, I saw that there was a complete lack of sophisticated financial infrastructure around this $500 billion that changes hands. And so I was intrigued, what kind of innovation can we bring to the table to help the consumers? And that kickstarted my journey with RentMoola. I presented my vision to the board and the shareholders, and they were very excited by what we can do to actually help consumers. So if you think of it, Matt, the 2 major consumer classes. We have the landlords, fairly easy to understand. So they care about, really marketing the property well and wide, attracting the best tenant for the property. They are very much concerned about cash flow, right? It's all about revenue lifecycle management. You collect your rent, you pay your mortgage, you take care of your expenses. It's a very tight and codependent revenue lifecycle that they care about. They also do care about risk mitigation. It's all about
Mm-hmm.
tenant screening. It's about rental insurance. They want to make sure they take care of all of those things. They are very much concerned nowadays about building a community with their renters, because that is the must-have amenity today, community. And then they look at things like, what other opportunities can I have? What about working capital? So can I use my revenue producing rental unit and then borrow against it and make upgrades to the rental unit, like HVAC, heating system, plumbing, and increase your income capabilities. But last but not the least, they're also pretty much worried about what kind of reporting analytics can they get, right? As you start to have more rental units, you want to understand what is the forecast versus collection, what about the data analytics, and increasingly we are seeing the trend move towards, can I understand and predict renter behavior, right?
Mm-hmm.
So all of that is very important for the landlords. Now, the tenants, on the other hand, extremely diverse population from very diverse socioeconomic background, multi-generational. You find people in senior living to short-term rental. You find student housing to working families in large towns, small cities. Extremely diverse. 44 million of them in the U.S. Another 4 or 5 million in Canada. So if you look at them, what is important for them? They're looking at a comprehensive, system of engagement. So right now they have to do piecemeal, they have to jump in and out, and it's becoming a very stressful experience for them. And the other factor is, depending on their financial literacy level, their comfort with technology, based on how updated they are about different provisions in the market, they make suboptimal decisions. I call it asymmetry of information. Not everyone has the same amount of information, and this can lead to discrimination, wantingly, unwantingly, to a large swath of this population. And this is one area where we want to be an equalizer, as any good fintech should do. It's all about how do you balance the level the playing field, if you like. So what we do is we start a tenant journey comprehensively from the apartment search. So you search for the right apartment. Once you find the right apartment, we allow you to make an application for the apartment on the platform. And then one way to get ahead of the line is to submit yourself for a comprehensive tenant screening. So historically, credit, criminal checks, depending on what's allowed in the regulations, goes on. But increasingly, there is a demand for 360-degree view, like bank account analysis, income statements, and so on. So because landlords are finding that the credit score alone is not a reliable indicator of a renter's intent and capability to always pay rent on time. So there is room for sophistication, and we are probing ways of giving a little bit more than the conventional credit check, if you like, a 360-degree view of the consumer. So you now get in front of the line, and then we ask you, do you have a tenant insurance, which is required to rent most of the apartments in large cities. If they have one, we just upload it, say it's all done. If they don't have one, we just tell them, here are our partners. In under 2 minutes, you can procure a very good rental insurance on our platform. So again, it's a easy opportunity. Under 2 minutes, you have your rental insurance. Then we ask them the next question, particularly in the US. In these difficult times, when everyone's worried about cash in the bank account, are you really going to put up 3 to 5 months rent or 2 months rent even as security deposit? Because that cash sits in the landlord's bank account. The landlords don't enjoy it. It's one of the most difficult, cash to maintain, because it's expensive to maintain cash. The interest, remember, belongs to the tenant, and it also is a reporting nightmare for the landlord. So instead, while we take the conventional security deposit, cash deposit, we also offer an opportunity to buy a security deposit alternative. So for 10% the cost of your security deposit, you can buy a bond valid for 3 years, and the bond covers the value, and you get to keep your cash in your bank account. Now, talking about information asymmetry, not many renters know about this, but you don't have to take your hard-earned cash, and instead of deploying it in other ways and taking care of your family and other things, you don't have to make it sit in a lockbox or in a secure account for 3 years, 4 years until your renting term ends. So that's another advantage. Now you're set up with everything. We now think about your payments. Payments for rent happens 12 times a year. So what we have to do is provide 360-degree convenience. So we allow them to do bank transfers, credit cards, debit cards, digital wallets. If you want to just take a photo of a check and have it deposited, you can do that. But also we are finding, going back to that asymmetry of information and people's different levels of comfort with technology, some people still prefer to write checks. So we can't turn them away. We have logbox solutions we're working on that allow them to do that, money orders as well. But in cash is also very popular, but it's not widely available. We make that happen. For example, if people want to pay cash over the counter, and during times of COVID, the landlords cannot staff their front office. Through our partnerships, we allow them to go to one of 85,000 retail locations in North America, CVS, Walmart, Walgreens, 7-Eleven, Dollar Store. And the process is really simple. You have a SMS with a QR code on it. You walk to one of these retail locations, cash over counter, and the whole data reconciles as though they made an online payment. Now, why is that important? It's convenience for the tenants. But for the landlord, it saves a lot of pain because you collect rent through the month. And if only a minority of your renters are paying on the platform, you have to manually reconcile at a time when you cannot fully staff your front offices. It's a real pain. And remember, rent is collected through the month, but it's also collected every month. So it's a never-ending battle. And we are helping ease that. So not only do we have close to 100% collections possible on the platform through this convenience play, but we are also able to automatically connect to these systems, their systems of record, their ERP systems.
Yeah.
So we eliminate manual tasks. So all of this is taken care of. Now, this is all great so long as you have the money to pay your rent and you are really doing well on your finances or reasonably well on your finances. What happens if you need some short-term help? So in this case, we look around and we actually offer a liquidity solution. 2 versions of it. Both will be available on the platform in the coming months. So we are completing the final stages of it. So the way it works is, imagine the shopping experience on Amazon. So the renter has rent and other costs attached to the apartment. So they check and put it into a shopping cart. And at the time of checkout, we offer credit. Single click of a button, 30-second application, 60-second decision, and a revolving line of credit between $100 and $24,000 is set. That's awesome. And it's offered interest-free, and you can complete the transaction in 15 seconds, and you can actually pay the rent. And if you don't qualify for this revolving line of credit, which is offered interest-free, then you also have micro financing opportunities. So you can really make up that gap. And if you have past due rent, you can take care of. Now, once you're done paying rent and you're taking advantage of the liquidity line and it allows you to get full control over your finances, now we also offer you the possibility to report your on-time payment of your rent and utilities to the credit bureaus so it can improve your credit score. Because it does control a big part of your life, the credit scores. So we can allow you to maintain it so that maybe you want to rent a bigger apartment or you want to go out and buy a home, you can do that because we help you through the process. And remember, rent and utilities is one of the on-time payments that every consumer makes. And you might as well use that to boost your credit score, right? And last but not the least, we have a comprehensive tenant communication platform where we can have bulletin boards, we can have a marketplace. It's like a garage sale. At a time when your home is now everything, right? Your gym, your workspace, your office, your shared space, everything in there. This market space allows you to build a community within your rental property, rental community, if you like. And last but not the least, for the landlords who are concerned about mom and pop shops, the restaurants, we can actually allow them to advertise these local businesses on the platform so that you can start, helping your community as well. So there's a lot of good stuff that we have combined together, as you can see, Matt.
Awesome. Yeah, I love the thorough breakdown. And so one thing I'd love to maybe pick your brain on, because I know you deal with a lot of landlords, a lot of property managers, them being one of the customer segments you guys focus on, is it's interesting. It's a recurring theme we often explore on my YouTube channel that real estate's a very old business, right? And because it's a really old business, for whatever reason, it seems like it's slow to adapt or adopt technology or new solutions.
Yeah.
And yet a lot of the stuff you laid out there makes a lot of sense. You know, a lot of landlords aren't very thorough at making sure that their tenants get tenant insurance. And yet it's actually quite a simple process. Pretty much anyone can get tenant insurance. It's a very low cost, but
Yeah.
it's just that it's kind of a high pain in the ass factor for you to ask the tenant to go get it, for the tenant to then go get it, then the tenant come back and actually show and prove to you that they got tenant insurance. So what have you found with, you know, dealing with landlords and property managers? Like, what's the struggle or what's the knowledge gap there between them like taking their business to the next level by implementing some of these, you know, new solutions that are going to allow them to be more effective and efficient as a business owner?
It's a great question, and that's why I started the segment by saying that this real estate rental segment is ripe for disruption, and there's a lot of factors that goes into it. And one of the things I like to point out is the landlords are not one size, one shape, right? You have this very large corporate and REIT holdings on the high end of the market. They have 100,000, 500,000 properties. They have millions of rental units. And then you have this predominant upper mid-market, large enterprise scale landlords, 200,000 of them in the US. And they represent around 20, 25 million rental units. And then you have the single landlords. There is actually 95 million single landlords in the US. 12.5 million of those homes are rented, right? And last but not the least, we have the smaller multifamilies. We have duplexes, 2.02 million duplexes. So the one thing we tend to really not remember is that 67% of Americans are homeowners. And if you look at most of middle class, your savings are usually a property. You just save up, and that's what it is. And the commentary is, if you are ultra wealthy, your wealth is in stocks, and if you are middle class, your investment is in homes. So there is a variety of reasons here because of the vast gulf in the different types of landlords. Most of this is conventional thinking. I think, for example, misconceptions. The first misconception is, if you are a renter and you can't pay your rent on time, you must be fiscally irresponsible. So that's one of the stereotypes that goes around. And in normal times, you would say, oh, I'll show them the revolving door. The tenant goes out. I have no problem, high occupancy. You know what? COVID comes. For the very first time in very large cities, there is 10 to 20% vacancies. So what people have to realize is that 78% of Americans are living paycheck to paycheck. And 40% of them cannot withstand an unexpected $400 spend. And they're making tough choices. And it's tough for everybody. And COVID really amplified the problem, but the problem was there from the beginning. If you look at some stats, I read a stat and a survey a month and a half ago. It said 63% of renters have managed to stay on top of paying their rent by making extraordinary sacrifices. It's everything from really selling off their assets to borrowing to dipping into their savings. So it's very tough out there, and we need to recognize that. And oftentimes what happens is the credit score controls a lot of your borrowing capability and your liquidity capability. And credit score can be argued that may not be a clean indicator of your credit worthiness, right? So it does discriminate against immigrants coming in. It takes a while to build it up. If you happen to have a couple of bad incidents in your life, it takes a while to put the score back together. It's also feared that maybe 1 in 5 credit scores in the US may have a fault in it as well. So yet it controls. It's a snapshot of your financial history that is used to make decisions, right? So there is a lot of things that needs to happen and change here. So the opportunity for disruption here is very, very pervasive, right? For example, we have the institutions, you have the fintechs like us. There's chance for partnership here to come through. So simplifying all of these amenities, as you pointed out, rental insurance, security deposit alternatives, having liquidity and micro loan capabilities, just to make sure people can stay on target. All of those things become, very, very important. And what about lending itself, right? Instead of just looking at credit score, we can look at data, which is one of the things that we are doing with our line of credit. So it's not just based on their credit score, but their financial history, because there may be social factors and other things that may actually indicate much better the intent and capability of the consumers to pay back the loan. So I think it's a journey. I think what we are finding is COVID has created a common cause. So we are, for the very first time, finding that there is 34 billion in past due rent that has to be collected, right? So we really have to come together as a community. Compassion is key, and we need to figure out new ways of doing work. So what I'm finding, Matt, is that there is a very receptive audience to think and consider change, and look at things. Now, the landlords are also heavily impacted by COVID. A survey that I read a month ago showed that 10 million landlords do not have conviction that they'll be able to make their next mortgage payment. So this is a crisis in the making. It's affecting everybody. Imagine what happens when you can't collect your rent. You depend on your rent to pay your mortgage. So I think it's a time for everyone to just take a step back and really think through this through the lens of compassion, and understand that every family deserves a second chance. Landlords are also equally, if not more badly affected by this crisis as well. So time like this allows us to get a better perspective. And I'm very optimistic that 2021 will see a plethora of changes in thinking, in approach, and in communication, in focus, if you like, in building that cohesive community. And the renter population is only increasing. You look at North America, but think of countries like India, Latin America, China, right? These are exploding population, just like healthcare. The renting and that industry is here to stay. So I think the industry is definitely ripe for a lot of innovation. And I think where this all comes together is leveling the playing field on financial literacy. Regardless of where you come from, what your socioeconomic background is, the features should be easy to consume. So it's all about empowerment of the consumer, giving them the opportunity to take control of their finances. And the way to do that is by providing them a simple, secure, and a fully integrated system. So think of our platform like a high-end retail experience for the renter. They walk in, and all the products that would normally require research and effort are now on the shelves. And they have a shopping cart, and they can pull things in. And now, can we level the playing field and have everybody consume it? I believe so. And I think the answer is intuitive user experience. And if we can create that, we can really create a lot of value. That's what I believe.
Yeah, I really like the high-end retail example or analogy. I think far too often, especially with like smaller landlords, that's a big segment of my audience, right? It's easy to fall into this unfortunate dynamic of like being confrontational with our tenants rather than understanding at the end of the day, they actually are our customers. And if we can create a better customer experience, inherently we should be able to attract better customers and just result in better margins and profits for us as landlords as well.
Absolutely, and you brought a very interesting point. So we are finding an increasing, diversification of the rental population, if you like. You have the Gen Zs, millennials. They're bound by social causes, right? They love the concept of community. And I keep stressing this: community is a must-have amenity. You really need to have it in the modern day because there are some macro changes that are happening. Let's not ignore that, right? For starters, since COVID has started, it's no longer necessary for people in high tech and all the banking and other industry to live in large cities. We already have seen a mass exodus of people packing their bags from San Francisco, from New York, and going back to their hometowns. So there may be a radical change in the way workplace and the workforce of the future are going to evolve. And maybe a short-term phenomenon, may not be next 10 years. It's changing as we speak. So, the days of 100% occupancy, record rents, maybe slowing down, if not coming to an end, right? It's definitely slowing down. So as a landlord, you have to think about your brand. You have to think about that relationship and so on. You have to think about creating that inclusive community for the tenants. And technology can be a great leveler. Technology is the way you can deliver that.
Yeah, absolutely. And touching upon the idea of the brand, we're already seeing that really seep into real estate investing and being a landlord more in Airbnbs and short-term and vacation rentals. And I imagine it's only a matter of time before we really see that being adopted by just all landlords really wanting to distinguish themselves, right? Try and move away from being a commodity provider and really like an individual experience. And if you can create that higher end retail experience and services with your tenants, I think that's awesome. So Karthik, if there's a landlord or property manager listening to this, what does it actually look like to join RentMoola? Like what's the sort of process? What sort of costs am I looking at as a landlord? Because again, at the end of the day, a lot of them are very focused on the dollars and cents of business.
Absolutely. So you can reach me at ceo@rentmoola.com, or you could visit our website, rentmoola.com, and book a demo. So the one thing we really focus on is, it's not one size fits all, right? Every landlord is different. We have to be very conscious of what is allowed because local regulations play a big role. And we've also seen that the COVID has affected different communities differently. So you're in a large city compared to a small size town. If you own Class A, Class B buildings versus Class C, Class D buildings, depending on your population, there are a lot of trends, and we do quite a bit of benchmarking. So we love to listen. So a big part of our sales cycle start with discovery, asking the landlords, what are you going through? What are your key concerns? Is it just revenue lifecycle management? Is it risk mitigation? Do you want access to all these alternatives? Do you want to make your home attractive? Do you want to protect your on-time payment at all times by making available this liquidity for your renters? So these are ways of really crossing the bridge, if you like, and for both the landlord and the tenant to have a common goal. And we help you bridge that. And then we talk about post-discovery, a value engineering exercise. So we try to lay out what kind of opportunity efficiencies does this platform bring, what kind of new opportunities you're able to capture because of these new services we provide. And we actually we quantify it for them. We tell them, here is your return on investment. So, and we also tell them, what are they missing? We're not doing this every day, every month. What are you missing out on? So we believe that quantitative analysis and making clear goals joint goals with the landlord helps the process. It builds confidence, and we're able to show them these are the advantages you can bring apart from the soft advantages that we already spoke about. And then we go through with the contracting process and we bring them on board. We actually have a white glove, red carpet onboarding service because our entire service runs from signing up the landlord, but then onboarding the tenant. Okay. So think of it like a B2B2C. So what we take care of is that we make that process as smooth as possible. We have, with the permission from the landlord, we work with them. Sometimes they prefer and they say, hey, we like this white glove service. Let's just work with you and reach out to our tenants. Could be flyers. We could just print in where they can sign up. We send them emails with permission, text messages, call centers. So we have a whole range of services because it's all about, like I said, taking a compassionate view. The journey doesn't stop when the contract is signed. Actually, it starts when the contract is signed. So we work towards that and make sure that the tenants come in. Yeah, and in understanding the disparity in information, the comfort with technology, we're always there to help through either a chatbot or an SMS or a phone call. So we help every tenant get on board, get things set up, and so on, right? So that's the whole process. Now, in the cost structure, there is a platform fee. It's a very nominal platform fee. We charge the landlord. And there is a transaction fee. It's mainly because we work with the different payment gateway service providers to make things happen, and so on. And some of these services are partner services. We in many cases have gotten preferential pricing because that's a distribution channel. So it might be, but you have to do your own research. But our job is to co-locate them in a single platform, so you have the benefit of them. And then, so that's how it goes. And then we continue the journey. It's every month you make the payment. 35 to 40% of our renters just set recurring payments and they move on. So it just automatically comes in. But through COVID, we are finding that people are looking at least 2 to 3 different methods of payment. It just used to be bank. Now people are worried about cash in bank, as you should, right? And we're doing it, and we're watching this situation pretty closely. But it's pretty much evolving, right? With COVID, for example, the stats show that in the month of December, only 75% of renters actually made their payments, rental payments, either full or even partial payments. This is an 8% drop from same time last year and a 5% drop from last month. So we talked to the landlords and talked to them about what are your concerns. And some of them may have allowed, rent deferral as part of the, mortgage deferral they got from their lender. But that money still has to be collected. Unless something dramatically changes, we see that the CARES Act, which had both the unemployment checks as well as, eviction, stopping measures that were included, is coming to an end. So we don't know what the new law will be passed, and we don't know what the next administration would do in terms of rent forgiveness. So it is a real concern for landlords right now. So we work with you on strategies. Now, how does our liquidity platform help you do that? And also remember, by allowing the renters to report their on-time rent payment, there is an incentive for them to always pay on time as well. So there's a lot of soft features and benefit that go both ways, right? And what you want to do is help the renters with the intent, but do not have the capability. And a lot of this, let me remind the audience, is short term. Is short term, right? You have to remember that these are extraordinary circumstances. It's a global health pandemic in the middle of an economic crisis. Very rare, So we have to get through this, and I think we can build bridges and bonds and a strong community by working. Now, the other areas that we can work together with the landlord, the tenant, is simple education. So we can provide, educational videos, how to make things happen. And the most important feature for the landlord is that reporting thing, right? What's your forecasted collection, and what is your actual collection, and what kind of corrective actions do we need to take? In many cases, our largest customers and some of our valuable customers work with us, and they say, hey, we are falling behind on our on-time payment. We are seeing either partial payments come in or some delayed payments. Can you work with us? So we run a campaign and we introduce other things. So it's collaborative. It's a journey. It's a strategic partnership. It's far from a transaction. That's what I like to tell the landlords.
Awesome. Love it. Yeah, that's extremely thorough. That sounds like one of the most thorough onboarding processes that I've ever heard of for landlords. So that sounds like a really unique solution. Do you find, is it landlords and property managers of all sizes and like types of operations that are joining RentMoola, or is there a certain niche that seems to stand out?
No, we support landlords of all sizes. The very large landlords obviously have different pain points, 1,000+ units. If you look at 50 to 100 unit landlords, they have a different pain point. Compare that to single landlords as well as duplex. We support everybody. It's fairly simple, because you look at the services we provide, they are tenant centric, right? Because you have a single unit you're renting, or a single house you're renting, doesn't mean you can waive your tenant insurance or security deposit. It's the same service, right? The scales are different maybe, but the pain points are similar. So now we are for everybody, and we work with everyone, landlords of all sizes, of course.
Awesome. Love it. Well, this was great to just learn more about RentMoola. Really appreciate you making the time. We'll throw a link to everything in the video description down below for anyone that's interested in checking out and learning more about RentMoola. And just an FYI, a lot of Canadians following me because I'm a Canadian real estate investor. They're also a Canadian tech startup. So that's super cool as well that RentMoola is based here in Canada. So again, really appreciate you taking the time, Karthik. Anything else that we should know about RentMoola or yourself before we wrap up?
Now, I'll just make an appeal to anyone, right? It's not just the landlords and tenants, but also institutions and other fintechs. I would issue a call to action, right? We are all facing something extraordinary right now, and need of the hour is compassion. I think all forms of collaboration should be open right now. I mean, it's not about competition. It's not just about survival. It's just a mega market, impacts the life of several families, 1 in 3 families at least. But if you add the landlords, almost the entire population, right? So this is the time to collaborate. Cooperation is welcome. What we're trying to do here is change some stereotypes. in terms of, who is a good renter, who is a bad renter. We have to understand that there are a lot of hardworking families, single parents, people who work 3 to 4 different jobs. They're hurting right now. And so are the landlords. A lot of their savings are tied up in homes as well. Like I said, most of middle class families' wealth are tied up in the home. So what I would like to call here is to take a more proactive role, take a time and effort to understand each other's point of view, and most importantly, try to make sure you're using all the tools available to you to overcome this crisis. And oftentimes, the difference between small and medium businesses and ordinary American families and very large corporations is access to liquidity. So when you have liquidity, you can overcome any problem. All right. So my wish is that the hardworking families in North America and across the globe, as well as the mom and pop businesses, figure out a way and have the means to access capital. No one's looking for a handout. It's not a handout. It's a second chance, and everybody deserves a second chance. So I'll leave everybody listening with that appeal. Remember, some of the most valuable companies were built by solving real problems. And now is a time to stop being a keyboard warrior, get out there and do your bit to help the community. We are trying from our part. We don't know how successful we will be. I'm hoping very, but ultimately, it's a tough problem. There are no silver bullets. So what we need is collaboration. We need the entire village to work together here to get out of this trouble. So that would be my appeal to everyone listening.
Love it. That's a powerful message. And there's a huge lesson there for any landlord or business owner. Liquidity is key. And a lot of business owners and landlords found that out in 2007 to 2009. And had they been able to just get access to a little bit more liquidity, they might have been able to hold on. So again, really appreciate Karthik. This was a lot of fun.
Thank you, Matt. Real pleasure. Thanks for having me.
Thanks again to Karthik and the RentMoola team for setting up this video, being willing to jump on and just share their perspective and what they're seeing from their customers. There's a lot of rumors out there, a lot of half rumors, half truths, and I think it's just important that we actually go to the source and listen to people that are dealing with landlords, property managers, and those with large rental portfolios on a regular basis. Really appreciate Karthik jumping on today's video. If you guys want to get connected with him or find out more about RentMoola, we'll throw a link in the video description down below. But again, if you're currently in the prop tech or fintech space, especially if you're in Canada, I would love to get connected. Let me know in the comment section down below. I look forward to getting connected with you guys. Thanks.